Andrada Mining is the technology metals producer with mining and exploration assets in Namibia. It has shared various investor updates so far this month, including a restructuring of the business and an operational update for the first quarter. I'm delighted to be joined by the Chief Executive, Anthony Viljoen. So, Anthony, a lot going on. I'm just wondering, what was the rationale behind the restructuring? What's the value proposition, and is everybody happy?
Hi, Sarah. Lovely to speak to you. Yes, in terms of where we are as a company, we've often explained the first part of our strategy was always to get cash flow, get operational, start producing, and start explaining to the market exactly the size and scope of our portfolio of assets. This restructuring comes as part of more of a streamlining of the corporate structure. As a lot of people will know, we're engaged in strategic discussions, and this allows for strategic partnerships specifically at an asset level.
So, Anthony, how does this impact the strategic process? What exactly is going on with the process, and why is it taking so long?
Sarah, so this transaction actually unlocks a large part of why the strategic process has taken so long in terms of streamlining the corporate structure, making it a lot simpler to manage. It's as you can imagine, these discussions are quite delicate. They're confidential. Unlike an engineering project where you've got definite timelines and endpoints, you're unfortunately reliant on discussions with multiple different parties, and we've had to maintain the integrity of these discussions with these different parties. Parts of the discussion have also involved test work, quite extensive test work on the different types of different parts of the ore body, in order to get a better understanding of what's required from the partnership going forward. This won't only be a financial partnership. This will be a technical partnership. So it has taken quite a lot longer than we had anticipated. I know that there's a lot of chatter about it, and a lot of frustration. But I think that this transaction sets the scene for where we're about to depart from with the strategic process.
So let's talk about the restructuring, and let's give a bit of colour to those who might not have seen the release about the restructuring and which parties are involved.
So we've been in a very successful partnership with our local partners, the SMU. When we set out to establish the company, we were both had the same objectives of restarting mining operations in historic mining areas, the biggest of which was the old Uis tin mining area. We've done that very successfully as a joint venture. As the partnership has grown, and the need for a more streamlined, as I mentioned, corporate structure in terms of operations has become necessary. The partnership is evolving with the SMU in that we have, as part of the transaction, they're becoming shareholders in the listed company. So given all of these pieces of the puzzle, it's basically a natural evolution of the company and a natural evolution of our existing relationships.
Okay, so the SMU, the Small Miners of Uis. Now, given that the other side is a local Namibian not-for-profit entity, will the deal benefit, empower local stakeholders? Will they still be doing what they love?
Absolutely. And as part of the transaction, we are also introducing further empowerment partners. So this from a Namibian empowerment and stakeholder point of view is really value accretive. We don't see that this is a departure of our relationship with the SMU. In fact, I think if anything, it's strengthened our ties with them. but it's given the SMU a renewed focus in terms of assisting us with our corporate social responsibilities, and ensuring that our success on Uis is carried over to our other assets, because a key part of this restructure is making sure that our entire portfolio realizes value. And that's something that I think we should also discuss a little bit more in a little bit more detail.
Okay, so before we do that, there's consents are required from the Ministry, Orion, Standard Bank, the Development Bank of Namibia. You know, how confident are you that everyone's going to approve?
So we, I mean, those are mere formalities at this stage. So as you can imagine, as part of the whole deal process, we've engaged with most of the stakeholders. You know, there shouldn't be any hold up on that. I think the biggest one is just applying for the shares to be admitted to AIM, but you know, that should be a relatively straightforward exercise. We see this as largely a completed deal.
Okay, so talk to me about how the organisation looks now. Andrada Mining, what does it have? It's on its pathway to be a multi-stringed entity in terms of what it's exploring for. What do you have now, and what do you want to explore for? What can you do now that all this has occurred?
Well, Sarah, it's worthwhile taking a step back and you know, just explaining where our sort of the whole strategic hypothesis lay when we first started the company. We've always been prospecting and looking for mineral development opportunities in geologies that we believe have the potential to be the next frontier in terms of mine development. And when we went into Namibia, we took a collective view of the geology in the area, and we highlighted specifically the mining license areas that were historic operations. The biggest of those historic operations was, in fact, the Uis operation, but the others, Brandberg West, and is very now specifically Lithium Ridge, were also historic mines. So the idea was that when we started the company, we wanted a portfolio of producing assets in a mineral-rich region that we believe could be the next frontier in terms of critical raw material development. So we've done that very successfully with our first asset. Now, I think a lot of people have missed the absolute beauty of an asset that is Lithium Ridge. You know, we had some great announcements last year. I think people have been fixating on the strategic process, but they should look at what we're sitting on in Lithium Ridge, and even Brandberg West now is coming into its own. So now where we are is it's a culmination of delivering on the first part of our strategy, but now to growth and expansion, and realizing assets for these other. For the other license areas. And bear in mind, most junior mining companies are only fixated on developing one asset. We're a triple asset developer, producer, cash flow generator. So you know, we really are on the cusp of the next tier of growth for this mining business.
Okay, so please don't accuse me of fixating on one asset, but is there any update on the lithium pilot plant?
Yes. So you'll notice in our last quarterly, our all-in sustaining cost had increased slightly. That's as a result of us doing an accelerated pushback on the pit. So our ore body extends at depth, and the grade gets better at depth. So what we've been doing is an advanced and more aggressive pushback on our pre-stripping. So naturally, our costs have been going up on the all-in sustaining cost. But what that allows us to do, and we're probably about 3 or 4 weeks now away from the very high grade lithium zones. So this is, you know, we've really been pushing quite hard get to these zones. But the pilot plant is operational. We've been doing some deep hole test work on the pilot plant, but now once we get into this ore, it's all systems go.
And as you're pushing that frontier, what is the priority now as you become a multi-mineral producer of critical metals and minerals? Is it the tin, the tantalum, or the lithium?
So it's worth talking the tantalum. I think people have also been wanting an update there. The tantalum plant is up and running. We've sold our first shipment to Afrimet. So I'm very excited to see that, although it will be a small mix of the revenue. The lithium is obviously going to be the major catalyst. I think it will eventually account for about 70% of our overall revenues. But the beauty of the pegmatites, and specifically the pegmatites within Namibia, is their polymetallic nature. So that means that you can have multiple revenue streams from one mining operation, and so you've got a multi-asset, multi-commodity, multi-decade opportunity on multiple assets. And sometimes we have to pinch ourselves as a management team just to see how lucky we are to be in such a great area with such great assets.
But therefore, will you be needing multiple streams of funding? The operational update, the restructuring, do you think that gives potential funding partners some comfort? Is that the way that you are looking to fund all these different opportunities?
So we've taken a very calculated approach to the way we fund our operations. Traditionally, a junior mining company would go and raise some money and drill some holes, raise more money and keep up with the dilution. Our whole approach to the development of the company was to focus on initial cash flows, and those initial cash flows have allowed us to attract different financing partners across the financing value chain. So we are very lucky that we've got Orion Resources partners who are a very well-established private equity company in the mining business that have already come on board and partnered us with a willingness to finance beyond all of our feasibility studies. We've got a local participation through Standard Bank of Namibia, who we've got a hedge with. On the tin, we've got the Development Bank of Namibia, who obviously have got a vested interest in seeing the development of this region proliferate. And we're very proud to announce that we've also now entered into a partnership with Bank of Viljoen, that to come on stream as a banking partner. And the relevance of all of this is that we don't want to have to rely on our equity shareholders for development capital, and this allows us to use our cash flow generation to further develop our assets, and you can see that as we go through the capex cycle, which is fully financed now for the expansion. You can see that it's a self-fulfilling development financing model.
Wonderful. Just a couple more questions, if I may. You did mention tin there, so get your crystal ball out, because what is your view on the tin price rally? Do you expect it to continue?
I might be a little bit biased, Sarah, because I've been a tin bull for nearly 2 decades. I've looked at, I think, every single tin asset in the world. Some of my colleagues do a lot of podcasts, and they're very fixated on the marketing side. The tin market is fascinating, as is the lithium, but the tin market in particular, at this stage, there's no new supply coming on stream. We are probably the second industrial mine development in the last 3 decades. The others have been in places like the DRC, where our colleagues have done very well. The only other sort of potential area of new supply would be coming out of Myanmar. But what we're seeing is just basically sort of 3 decades of no mine development, and then you've got this huge demand pushing forward for all of your new semiconductors and your microchips, and we're getting to a confluence here where the basic sort of demand and supply dynamics it's just unnaturally won't be able to sustain itself, and there's going to have to be a tick up in tin price. And the nice thing about being in production is we're directly exposed to any run in the tin price. So I often say it's an all or nothing thing in the mining game, and right now in the tin space in particular, it's all on.
Well, let's hope that investors are bullish. So finally, why should viewers watching this put Andrada onto their watch list?
That's a very good question, Sarah. And what we're seeing in the junior mining space, there's not a lot of liquidity in terms of new investors coming into the market, unfortunately, in London. I think that there's a lot of new projects are going to struggle with execution risk in terms of getting into development. There's not a lot of mines that actually make it, and junior mining companies that make it into production, let alone grow on the existing assets and develop other assets. So, I do think that there is going to be a natural attrition within the junior mining industry, but I think that we're above all of that. We're in cash flow. We've got a team capable of producing and operating assets. We're growing, and we're developing our other assets organically off our own cash growth. So I think that we are probably one of the best placed smaller miners in the space in London. And I also want to move away from the term junior miners. We're an emerging mid-tier miner now.
Many thanks. Thank you very much indeed for sharing the story and for talking to us about the restructuring and how there are so many beneficiaries across the value chain. Anthony Viljoen, Chief Executive of Andrada Mining. Thank you very much indeed for joining us.
Thank you, Sarah.